Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And today, in the company in KYC which will be featured, I'll give you some hints before you can guess which company it is. The first of all, it's a lubricant company. It's a lubricant business around the entire industry. And when talking about lubricants, it's regarding the auto OEMs. It's one of the largest players in the world. They also have a global partner. That's the first hint I'll give you. The second hint is the brand is endorsed by MS Dhoni and also Chennai Super Kings. And interestingly, he's one of my favorite players as well. The third hint, let's give you another hint for this company. And I think you are very close to guessing it because it's there in the emblem of CSK. Strong Q3 numbers have also come in after a long time. The stock has been under a consolidation for months. Also, another important hint I would like to give you is that the stock is up 57% in the last 5 years. That's still flattish if you are in the equity markets. So, of course, the mantra is ye dil mange more if you are an investor for this company. But let me introduce you to this company and give you this company which will be coming in the KYC today. Of course, we will do the entire setup for the company and the management. And the company in focus is Gulf Oil Lubricants. Yes, this is the company which we are talking about. And why are we calling this company? That's also very much important. So first and foremost, the reason is earnings. Earnings is the most important thing, and this time the earnings have been strong. Record levels for revenue, EBITDA and volumes. So that's the question we will be asking the management, why these numbers were so strong, at least for this quarter. How's the outlook looking like for Q4? And EV business, that's also very much important because the company has been acquiring a lot of EV businesses and the future is definitely there, and lubricants are also used in data centers. So of course the street is looking at this company as all the new age tech theme companies are there which will be focusing on the lubricants, and it's very much important cooling solutions. The outlook on the rural and the agri markets, that's also something which we are looking at. The company is expanding very much, and that's why this becomes a very stable bet when it comes to the business model. On the show, we'll have Ravi Chawla. He's the MD and CEO of Gulf Oil Lubricants, and we will be asking a lot of questions to Ravi regarding the industry and the company and the outlook ahead for the company as well. Also, let's look at about the company. What are the key details about it? And that's very much important. And if you talk about it, largely it's a lubricant company, and not from just the auto or the two-wheelers which you talk about, but there is also a parentage at play. It's part of Hinduja Group, and also Gulf Oil International is having stake in the company. It's the parent company. They're having a comprehensive portfolio in industrial lubricants system as well. That means a lot of B2B clients also the company is having. You must have heard about a lot of advertisements in which Dhoni was there, CSK was there. That's for the two-wheeler segment. But if you look at the B2B segment, that's where the focus is. It's you could say the B2C and the tie-ups are there with almost more than 50 OEMs and almost 1,000 industrial B2B clients. And it's pretty much interesting that they come in an entire big ecosystem. They are top 5 amongst the two-wheeler battery replacement segment as well. That's an interesting take, but that's on the lubricant oil segment. Tyrex Charges, it's a DC fast charging company. There was a recent investment there, but there is a whole lot of other investments also which are there in this space. Indra Tech, it's a UK-based show AC charger mobility firm. So you see a lot of futuristic announcements are happening regarding the acquisitions and these investments where the EV segment or the EV ecosystem is being targeted, and that's what makes it very much interesting to talk with Ravi on that. The passenger, but remember, when you start this KYC, I'm going to simplify it for you so it doesn't seem like it's very Greek to you. PCMO in this industry means passenger car motor oil. Let's see, what does CMO mean? Of course, CMO definitely means a motorcycle oil. So definitely these are the smaller names which you should be understanding. And OEM, you must be knowing, but I need to make you understand again, it's the original equipment manufacturer. These are the definitions. You should know that before we start our conversation. Also, the Q3 highlights, that's been really strong, and the quarterly numbers are there, that has done really well. Of course, that will impact the ratings also. The demand and the sales, they have picked up in the second half of the third quarter, and it's expected that the momentum might continue in the fourth quarter. The lubricant segment, the growth is coming in at 8% year-on-year basis, and management is claiming that it's twice of the industry growth rate, and that's something which is very much interesting, and we will ask Ravi how they are doing it better than the industry. EV business, they reported a positive EBITDA for both Q3 and 9 months FY26, and what's the path to profitability, that's also a concern on the street. Stable commodity prices have contributed to margin expansion. Remember, the crude, or it's a crude derivative product, which it's a lubricant, these raw material prices have been benign. A high double-digit gain coming in the PCMO, which is driving the B2C performances, and I know I've shared with you all the short forms. The highest ever quarterly volume in the OEM segment has been led by the PCMO segment. That's also important. All-time high volumes coming in the OEM franchisee workshops. That's kind of an ancillary service, but nevertheless on the higher margin side, and a double-digit gain coming in the motorcycle oil, and notably the performance in the agri OEMs as well. These are the important operational highlights which I have gathered in. A good double-digit growth coming in the B2B industry also, which includes infra and the mining segment. Though these are contributing less, but nevertheless the growth has been strong. And overall the guidance, they're expecting the momentum to continue in the fourth quarter. And remember that Q3 spillover is also there of some important up moves in the revenue and the EBITDA. There's a continued focus coming in the rural and the agri markets, and importantly the EV subsidiary Tyrex that has started acquiring more new marquee customers. And we'll be asking this, what's the customer guidance and the demand trends looking like, at least for the EV business, because more EV addition news flows are coming in for this counter. But of course the street is not rewarding so much as the stock has been flat. I had mentioned that maybe there's a trigger which is needed for this stock, and this is the total guidance which we are getting for the company. So Gulf Oil, we have given you the entire picture of how things are going to move. But apart from that, let's also talk about what the KYC show is all about. We make you understand the company, we get you the management, but also the most important thing is the ratings which we give. You know, there are financial ratings, there are non-financial ratings, we combine them. 8 parameters are there. Income statement, balance sheet, cash flow, these are the important hard numbers which we see over the last 3 to 4 years. Take out the CAGR numbers, and also shareholding is there. Street cred is nothing but the share returns. If you are holding the stock, how much returns has come in 1 month, 6 months, 5 years, all of that we get in. And we also compare that with a peer in the valuation. And for this company, Castrol India is the closest player. And if you track small caps, Gandhar Oil is also there. But in our analysis, we have just kept Castrol and Gulf Oil because of their same sizes. Analyst stake is there, what the analyst community is expecting, and the next 12 months, what the return potential would be. But now let's start the analysis. The first one is the income statement, and already I had spoken about a very bumper or a very strong Q3 numbers coming in, and overall also you look at it, there is a steady margin increase in this kind of business. Remember, crude derivative product, lubricants and the crude prices are benign, and that's why you're seeing a good margin up move happening. There's of course the operational leverage at play as well, which the management Ravi will explain us. Revenue growth has been decent. It's a stable business model, and there is always a demand in the replacement market also. If you're tracking the auto sector, this becomes an auto ancillary, to be honest. And the net profit, that has also seen a decent jump. So net income statement, it's a strong thumbs up. So let's talk about the balance sheet also, how things are moving. Net worth has gone up decently. The debt levels, it's on the higher side, and that's what we'll be asking the management, Ravi, that why this debt levels are on the higher side. Is it the working capital, or is it the higher investments coming in the EV segment? That's why the debt is propping up. Cash is significant, and that's around 1,027 crore rupees of that. Is there going to be a more cash deployment in acquisitions or something for the shareholders? That's also a question to be asked, but net, it's decent. So balance sheet, I've given a 0.5 when it comes to our ratings for KYC. So we spoke about income statement, we spoke about balance sheet, but let's talk about cash flow, how things are moving here. And largely it's a stable model, but some numbers might be changing around. And operating cash flow, significant jump, 423 crore rupees coming in FY25. And look at that big bump coming in the net cash flows also. That's 320 odd crore rupees. Of course, there are some one-off items, but more cash, better it is for the business. The ratios improve. And that's why I've given a strong thumbs up when it comes to the cash flows. Also, let's talk about the return ratios, how the return ratios are panning out. And generally in these type of business models, anything above the 20% mark is very strong. But what good thing I've liked about this return ratios is it's increasing each year. 23% in FY22, and then it's been increasing for the next 2 to 3 years at a good rate, and now it's comfortably at 28% at its high levels. We can expect a 30% also. That's what the analysts have talked to me about, but maybe in the next 1 to 2 years, and that's where the idea lies. Be it the EV, be it the data center, that's the cooling angle which is there for the lubricants, and it's very much needed. Whenever you need energy, you need lubricants to cool also. That's the most simplest thing to explain you on that. And ROE is strong, so I'll give a thumbs up when it comes to the return ratios as well. Shareholding pattern, let's have a look. Yes, there was a big sell-off from the promoters, and I think they have put back in their cash balances. That's why it was looking lumpy, and that's what we are seeing. They have reduced the stake from 72 to 67%. FIs, on the other hand, have increased their stake. And even DIs, if you look at it, they have also increased their stake from 5 to 8%. There was some kind of gyrations here. There was a movement here because of important stake sales, but net institutional participation has been good. And I would say it's still a neutral rating when it comes to the shareholding pattern. So we spoke about the shareholding pattern, some kind of institutional interest also coming up. But has the returns come for the shareholders? Because they are the most important viewers. You are the most important viewer. You're the important stakeholder as well in this entire ecosystem. But to be honest, 6 months, the flat price is there, nothing much there. I went deep into it year to date, nothing has happened. It's down 3%. And also, let's pull up, 1 year what has happened. The stock has been literally like a pancake. Now the concern is, if so many new announcements are coming and it's cash rich, why there is no interest coming in this counter? For the last 5 years, it's 57% only. So just break it down, year on year basis, around 10 to 12%. And definitely that's a question which a lot of investors had written to me regarding this company. So street cred, it's not good, up to the mark. So I'll give a thumbs down when it comes to the street cred. Let's talk about the valuations. Of course, if the stock hasn't done there much and if the earnings has gone up, that means the valuations become cheap. That's the basic mathematics. And there are two competitors, Gulf Oil and Castrol India. We have taken a 12-month forward P ratio to give you an understanding where does the valuation stand. In Gulf Oil, there seems an overhang in the stock, which the street is not pricing in the multiples. It's 11 times. Compare that with Castrol India, it's 18 times. So there's a very massive kind of a gap coming in, same type of companies, and that surprised me as well. What is that overhang which is, not making the stock tick? Valuations are compelling. So if you're looking at the current levels for the forward basis for the 12 months, valuations are very much attractive for Gulf Oil, and it's a strong thumbs up for me when it comes to the valuations. Also, let's talk about the analyst stake. This is our 8th and the last rating parameter, and almost 6 analysts are tracking it. And there's something very important here. There is not a single sell or a hold rating. All 6 of the analysts have given a buy rating to it. And since the stock was suppressed, we are having a 40% return potential in the next 12 months, and that's pretty much interesting. That means the street is very bullish on this counter, and because of that, analyst stake, I have given a strong thumbs up. Okay, now let's explain you the KYC ratings, overall how the company is placed. The numbers look good, the analysts have given a thumbs up, valuations are attractive, and net on the higher side of the ratings which we generally give, we are getting these numbers. Look at that, so many green thumbs ups are coming up. Cash flows also a strong thumbs up, return ratios has been good. The company is filled with cash. Now, what the company does with cash, that's what we'll ask Ravi. Also, the shareholding pattern, the institutional participation has gone up. And if you look at the street cred, all the investors who are stuck or invested with this counter, they will show concern and they will be listening to Ravi ji a lot. Valuations are very much attractive. Current situation, analyst stake, everybody is bullish. So totally 6 out of 8. That's the highest side of ratings which we are giving. But to give a little bit more perspective, we'll be joined in by Ravi Chawla. He is leading this lubricant business for India. for over a decade. He's responsible for not only that, India's subcontinent, Africa and South Asian operations, and more than 30 years experience in consumer products, tires and luggage. It'll be very much interesting to get in Ravi Chawla as well. And joining us is Ravi Chawla. He's the MD and CEO of Gulf Oil. Good afternoon, sir. A very strong quarter coming in, and I saw your presentation. Everything was all-time high. Now, will this sustain in Q4 also? And what are the factors which led to a very strong growth in this quarter?
Yeah, thank you, Sharad. I think for over a decade, we have been growing 2 to 3x the market. So I think this just bears it out, and we are seeing a lot of good demand shoots. So this is a record quarter for us at 41,500 KL of lubricants, and we have had all-time high of EBITDA also. While there has been last year the same quarter a one-time sale of land which we had 12 crores, and of course the labor cost adjustment which is about 20 to 23 crores. In spite of that, we have seen EBITDA of course grow and a bit of impact on the other profit PAT, but excellent quarter in terms of demand. All our segments which we are focusing on are growing well, and we have strong partnerships with OEM, which is also translated in excellent business there. So a good demand for the industry, and we are seeing good shoots for us to continue our trajectory and try to maximize the volume gain and the margin.
That's pretty much it, Ravi, when it comes to the performance. But I'm just looking at the cash balance. It's very heavy. Is it going to be used for some acquisitions in the EV space, which you have been already doing it recently, or any kind of a reward coming in for shareholders?
So we are happy to announce the board has cleared an interim dividend of 21 rupees. It was 20 at this stage last year. So rewarding the shareholders is always part of it. We also have invested in, as you mentioned, in the subsidiaries for the EV, and we've got two sort of investments in India and one internationally. We will continue looking at opportunities both in lubricants and also in terms of the mobility space. But as of now, we are doing well in our EV investments, and we continue to grow the core of lubricants, but keeping our eyes and ears open for any more investment opportunities.
Right. And Raviji, lubricants volume went up by 8% on a year-on-year basis, and you had stated that the Q4 also the demand is expected to go strong. So what kind of a range we can expect in Q4?
So industry grows at 3 to 4%. In fact, year to date, our growth in volumes is 9.83% in lubricants. This quarter, it is about 8%. Quarter four for us has been a high quarter last year. So we would continue to look at our 2x the market growth rate at least. And in segments where we have lower than 5% market share, industrial, PCMO, passenger car, motor oil, as you explained, these would be double digit. And our industrial business and B2B business, which is infrastructure and industries, continues to grow double digits. So I would say 2x the market growing at 3 to 4% is the minimum we'll do. And definitely we are targeting to be around that 8-9%.
8 to 9% volume growth you can expect in fourth quarter. But the margins, they are coming in the early teens now, and the raw material prices, one of the key raw material is of course crude. These prices are on the lower side, and it's aiding companies like yours. And if any operational efficiency kicks in, can we have a higher margin for the fourth quarter? What's your margin outlook looking like on, say, next 6 to 9 months?
On a practical basis, we've been saying 12 to 14% because last 4-5 months, you can see that though the prices of crude and then base oil has been steady, we have seen some increases in the exchange rate. Now, exchange rate obviously impacts our imports because, as you know, India also depends a lot on the imports for base oils. And while local capacity is coming up, the prices are adjusted. Plus, the exchange rate also impacts the additives we buy. So I think these two, the exchange rate has been the challenge. Otherwise, in this quarter three, it has sequentially improved by 0.6% over last quarter. But we would like to be towards the 12-14%, and 13% is not a bad achievement. But of course, pricing actions are happening in the market as we speak, and hopefully we will be able to go to a good, higher end of the 12 to 14. And eventually, with our product mix and our push in the market for distribution, more B2C, more, in terms of premiumizing our products, we want to move to the 14 to 16%. But this is subject to obviously these competitive and external things that happen on exchange rate, etc.
Right. And Raviji, the EV space, the way your acquisitions are coming up, and interestingly, your performance, you have seen, it's turned positive EBITDA. Now the path to profitability of your, of course, EV arms and the EV, strategy overall for Gulf Oil Lubricants India, what will be that?
See, we have identified chargers as one area, both the DC fast chargers and slow chargers. We are looking at other areas, and our philosophy is not to have cash burn. Obviously, we're investing in these ventures, and Tyrex today, which is part of us now, is selling one out of four EV buses is with us. In fact, we do better in certain quarters. We're also got AC chargers for MG and for VinFast, and we are spreading our distribution, our service network. So we want to look at these investments, and definitely we are targeting at least 400 to 500 crores in the next 3 to 4 years in the mobility space. And we are well on track to do that. Of course, subject to the new EV vehicles coming in good ways, like buses. This year has been slightly subdued, but hopefully the buses will come in more, and we are part of that and many other AC DC charging opportunities.
All right, but just removing the EV part, there is a entire industry, the energy industry, the data center industry, and the biggest requirement is the cooling solutions. And lubricants is also a part of this ecosystem. And we have seen, your peers also announcing important statements on the data center cooling solutions. Raviji, what is your take on that? The cooling solutions is being demanded all across the spectrum, be it domestic clients or international clients. What is Gulf Oil Lubricants doing here?
So data centers will require high energy. As you know, the computing is getting more with AI and others coming in. Globally, the trend is, of course, we have a lot of air cooled in India now. The water cooled, the liquid cool is coming up. And we have two candidates our global technology has already developed. We are getting into specifications and testing of these. And the Indian market is going to be small in size, but it's a good value addition, and globally it's a good trend. So we are getting ready for it, and hopefully in the next few months we will see some testing taking place where the specifications get validated, and we are ready with the product. So as it picks up, and I want to just add here that it's still a very small segment in India. Now, there are data centers coming up, but it will take some time for it to pick up. But we are ready for getting the next level of testing done for our products.
That's pretty much interesting. So the new age areas which we are looking at is, of course, data center, EV already. Gulf Oil has made their strides. Apart from this volume growth and the momentums which we are seeing, there is a continued focus on expansion, which you spoke about, the domestic part, the rural and the agri market. That's where the management commentary was bullish. So Ravi, I need your views on that. What are the expansion plans for that, for the rural and the agri space? And if you could just give out some volume growth for these areas which you are planning.
Yeah, so we have a strong brand. We have been investing in our brand for the last, I would say, 15, 16 years. With, we have three brand ambassadors, Mahendra Singh Dhoni, Hardik Pandya, and Smriti Mandana. We have been with CSK for very, very long. We also have global assets right now in Formula One with Williams and other properties globally. So our brand has reached a top three position, I would say, overall. And therefore, we need to increase our distribution because availability is key for driving purchase. While it is a low involvement to middle involvement product, lubricants, purchase is also related to availability. So we have close to 90,000 outlets, and we are expanding our distribution double digit. We have also rural network with touch points. We've also got a tie-up with Naira, which has retail fuel sites across India. And we have our own branded bike stops, car stops. So there is obviously a big plan and ongoing effort, I think, post-COVID to get into independent workshops. So this is our plan to increase our distribution at least double digit. And overall, that's the mantra which helps us to get into creating that width and depth of distribution, which is important for any product. So I think that's been our sort of endeavor, and we continue to strive for that.
Right. Thanks a lot, Ravi ji, for taking out your time and talking to NDTV Profit about Gulf Oil Lubricants, India business strategy and road ahead. And hopefully we see in the IPL with CSK as well. Thank you very much. So that's the management, Ravi Chawla from Gulf Oil Lubricants, talking about the company, the Q3 numbers and the future. That's the data center, the EV cooling solutions, and they're a part of that ecosystem as well. So that's all, folks, for KYC today. Stay tuned to NDTV Profit.